All right, guys, it's that time again. Let's talk about Tesla's next earnings call coming up this week. We are once again at a critical juncture in Tesla's journey as it has been on a massive run, but has recently fallen off some. And this earnings will determine if we start marching right back up again or if we fall back down under $400 on our way down to $300. And what is the one thing that could save Tesla stock regardless of the earning? Well, I will answer all this today for you and tell you exactly what price I would look to add Tesla shares at as well. I just asked in exchange for you guys to gently tap that like button and consider subscribing too. It's super easy to do if you like getting the truth without the hype. And honestly, guys, do that for all the creators that you love. At least hit that like button on their videos because it really does help all of us out. So kind of in a best case scenario here for earnings, I think Tesla just barely beats on both EPS and revenue, but that is kind of a best case scenario here. I'm missing one or the other, honestly, wouldn't surprise me much given the delivery numbers that they actually produced this time around. Not saying they were terrible or anything else like that, but they were underwhelming to say the least. And it's kind of hard to hit those revenue estimates when delivery numbers kind of miss what Wall Street estimates are. And it's really hard to hit those EPS numbers when you're intentionally kind of lowering margins to take up more market share and to kind of drive more demand to your product there. We all know that's the strategy. They've been doing it for a while now, but it does make hitting those EPS numbers harder, even if they're adjusted down. Granted, I said that, and then they did surprise us to the upside last time on EPS, but I'm trying to be as realistic as possible here with you guys. Now, we're going to talk about future expectations here in just a second, which to me are much better than what we're looking at right now, and I'm a lot more optimistic about. But Tesla had to do a lot of maneuvering this quarter to kind of get the numbers they had this quarter to include all kinds of financial incentives and just they had to do a lot of different things in order to get that number there. Now, yes, Tesla easily has the margins to absorb all this, but its margins obviously eroded a lot over the past year, finally starting to recover back up. And that is not something you like to see long term. You want to see margins going the other direction consistently, not kind of what we had over the past year. Understand a lot of that stuff was out of Tesla's control. Doesn't matter, just kind of presenting this to you guys as something you want to see. Because we all want to see a big run in Tesla, and that's how you end up with a big run in the end, because the bottom line profits, hitting that bottom line is what happens when we see sustained big runs that will actually hold that number. Not the hype runs that we've gotten in Tesla in the past where it just craters right back down. We all know about those, and we definitely don't like them, more importantly. Add in all the expansion at all the various factories and all the work going into Optimus and all the other R&D spend on stuff we might not even know about yet, and you have a recipe for kind of a less than desirable EPS number once again. But the good news is we may be at the end of that journey this quarter, because obviously we saw what happened last quarter, so maybe they can build upon that momentum a little bit. That would be incredible. But for me, even if the numbers don't meet expectations, which the consequences are going to be harsh in the short term, as a long-term investor, I'm not concerned at all, as I understand exactly why. That is why due diligence is so important. That is why studying your company, studying the earnings, studying all the filings, studying all the 10Ks, ignoring most of the stuff that's out there on YouTube, and actually getting in there and digging in and doing the work is so critical, because nothing scares me with Tesla stock whatsoever. Regardless of what the price is doing, regardless of what crazy thing Elon may be tweeting or whatever the case is, I understand exactly what's going on. I know exactly what I own, and I know what's going on, and I know what the long-term future is, not based upon a video, but based upon the work that I've done on the company and on the stock. But we are dealing with Wall Street, and earnings is their game, and Tesla has run up big coming into the earnings, which means Wall Street expects a lot more too. So you just kind of have to keep that in mind as we're thinking through these earnings, that, hey, you know, if Tesla was kind of beaten down coming into these earnings, it would kind of lower expectations a little bit. Whenever you run up real big coming into earnings like Tesla's had for basically the past quarter here, that Wall Street's going to expect a whole heck of a lot, and you've really got to deliver a whole heck of a lot to kind of keep that momentum going. But there are three big concerns that I have coming into this earnings call that are going to impact the earnings call and the share price more importantly. But I also have one big positive as well, plus one massive savior for Tesla to look out for, because if it comes, it's an actual catalyst for the stock. And we will talk about what I'm doing with my Tesla stock as well. Concern number one, EPS could be going down again. Now look, let me be very clear, guys. This isn't me being bearish. This is what Tesla and Elon told us was happening and has continued to happen over the past year. Now, EPS had a massive surprise upswing last earnings call, but is that sustainable this quarter given how dramatic the jump was? I say that because margins appear to have stayed under a little bit of pressure this quarter for a variety of reasons. And unfortunately, despite great energy numbers, we don't know what the effect, if any, will be on the bottom line because it still makes up such a small part of the overall profitability picture. And more importantly, as you can see quarter to quarter, regardless of what the number is, the amount of profits that it derives down to the bottom line is kind of random as well. And Elon actually told us that on the earnings calls that, hey, it's going to be unpredictable for now. And that's part of this growth journey with energy. So it's hard to really count on that, or at least not be prepared for it to come in less than, favorable per se. One day it's all going to be there, but we're talking about earnings today. And today it isn't quite there yet. Now, yes, of course, Elon can always pull the rabbit out of the hat again, as he's done it before. But it's been more than a year since we got the big jumps in EPS quarter over quarter. And I'm not saying it's impossible. I'm not saying they can't do it, but it's been a while since it's happened. And I know some folks will say, Elon always pulls the rabbit out of the hat. Well, you can go back over the past four earnings calls and see that is simply not true. So I'm not saying it's impossible. I'm just saying that it's a concern and you got to be aware of it. Concern number 2, Elon Drama. If the guy doesn't have enough going on with everything else, he continues to make waves that are honestly a lot of times unnecessary. Now, sometimes it's just media creating narratives. Sometimes he, kind of induces the entire thing. It's all over the map with Elon, and it is part of the journey with Elon. It's not like this is new or out of the blue. It has been this way for a very long time. This is who he is. This is what he wants. This is how he operates. Now, in regards to this earnings call, Elon is always a wild card that sometimes hurts on an earnings call more than he helps, as he kind of speaks off the cuff, or he gets kind of combative with the questions, or sometimes he just goes off on a tangent, right? And just never even answers the question, or it doesn't answer any questions on the earnings calls directly. It just kind of ends up being all over the map. It's really, kind of a crapshoot per se. It's the reason why we love him, right? Because that kind of eclectic personality is what drives Tesla to new heights. However, it also sometimes hurts the share price in the short term. So you got to be aware of that, because earnings calls are where you talk about last quarter's performance and then project where he would see Tesla going next quarter and through the end of the year. And of course, guidance for this year and all those good things like that, especially on this earnings call. And then maybe you do a final section about some big future things coming like Optimus, and maybe a brief tease on something else that you maybe work on. And you kind of move on from that. But that's not Elon style at all. It is random. It can be wild at times. And he may spend half the time or most of the time discussing things that are years into the future, or just, his candid thoughts on whatever is on his mind that day. That can create a very chaotic situation in the aftermath of that in regards to Tesla stock. But we will be going live for Tesla's earnings call, Palantir, maybe a few others, where members who take advantage of the earnings flash sale that's going on right now and will end shortly can ask me questions live during those earnings calls, along with take 5 free courses, free coaching, so much more. We'll talk about all that at the end of the video. It's the pinned comment down there for those that are interested. But just wanted to put that plug out there that we do go through earnings calls directly there, not a reaction, not any sort of crazy over the top, reading off the CNBC, bullet points of what they said in earnings and trying to draw out the juicy stuff. No, getting into actually what Wall Street is looking at, what is actually important to the stock, more importantly, and a lot of other things of that nature. Now, getting back to earnings here, we all know that Elon just can't stay off X long enough and is now fully into politics, which doesn't help much in terms of large investors' perspectives. Even those that share his political lean are not fans of this approach at all. Now, you guys know I don't do politics on the channel. I don't care about it, but there's not a lot of people who think this is a good idea for a publicly traded CEO to be this entrenched in politics at this particular point in time. And again, that goes for people who are investors on both sides of the aisle, not just one or the other. But put politics aside, just completely disregard it here. There are already a lot of big investors that view him as completely distracted, and that is why they don't invest bigger in Tesla. So you can make sure that that is weighing on people's minds during the earnings call, that he has so much going on everywhere. And if you don't think some on Wall Street won't draw the conclusion that Tesla not doing as well on estimates, or maybe guidance not being as glowing as they want it to be, or whatever the case is not a direct result of him not being focused, well, you honestly don't understand how Wall Street works at all, because it's exactly what they're going to do. Now, I'm not saying it's fair or that it should have any bearing on Tesla stock, because performance in the company is what should matters. I'm not saying any of that at all. What I am saying is that, fair or not, if that happens, it will have a short-term impact on the stock price. There's a reason why Tesla is the most volatile large cap stock that has ever existed by a mile, guys. Even companies valued at 20% the size of Tesla are valued at, is not as volatile as Tesla stock is. The bottom line is, if the numbers don't meet expectations, or if Elon says something that can be viewed as negative or distracting or crazy or whatever the case is, the stock will most likely get pounded once again, unless some of the things we're going to talk about here shortly happen. That's just the reality of the market that we are in right now and the situation with Elon. Concern number 3, energy. Now, slow down before you blast me. I already hear you guys yelling at me about energy being up massively year over year once again. I know, I got it. I agree with you guys completely. However, the concern is that it still doesn't add that much to the bottom line, which was proven last quarter when the numbers were really incredible, but it still didn't help out as much as everybody was telling me it was going to help out whenever they were announced. It just didn't translate to as much bottom line profits as we think that it should, and Elon told us as such that it's just not going to happen that way. We're not going to get consistency out of that yet. It's coming. Obviously, they're making huge strides there, but we got to wait for that to happen. I said last quarter before earnings that if Elon doesn't give us continued positive guidance and instead says it's unpredictable and not something to count on, it means very little to investors, and that is exactly what he said on earnings and exactly how Wall Street treated it. So energy for me is very nice to see. I love it, but not nearly as big of a deal as many folks out there make it out to be. It's coming, no doubt in my mind, but not this quarter or anytime soon, unfortunately, to levels that we really need to see it at. But it's not all doom and gloom, guys. I'm just giving you those concerns. There is one big positive that I see coming from this earnings, and then we will discuss the one thing that I think could save Tesla stock, and we see it on this earnings. Now, Elon told us during last October's earnings call, not, October 4 months ago, like a year from last October, that all of this pain was coming. So I simply, despite the fact being called crazy for it, just followed my planning accordingly based upon what he said. And I didn't buy any of the runs at the end of, 2023 or that happened in 2024. And instead, I just adjusted my price targets down because he tipped his hand per se on those earnings calls. And the stock has pretty much moved like a stock should, given the headwinds he told us was coming until this latest rally here at the end of the year. And that allowed us to not buy the hype runs and instead buy the downtrends, which for me personally, it was buying at 169 and 141 respectively. And many of you guys did the same or even better during that time frame, which is awesome. Congratulations, guys. And same thing goes with our group members as well, who were all over Tesla and buying Tesla in those price ranges. Buy alerts were going off all over the place during that time. And we have been just sitting back and enjoying this ride that has happened over the past 3 or 4 months or so with Tesla. Remember that as a long-term buy and hold investor, that is perfect if it falls once again, because we know why it's happening. And Wall Street will be short-sighted, meaning we all know that they will overreact like they always do. We also know where Tesla is going long-term, so that may give us the perfect setup that we knew was coming and you should have been preparing for if you wanted to buy more shares of Tesla. Now, Tesla, once again, is trading rich right now, and I don't see anything outside of the next point that will make Tesla stock skyrocket from a fundamental standpoint. Now, traders may push it higher, who freaking knows, but that's not good if it just makes the stock even more overvalued. You don't want that at all. So what is the one, maybe 2 things that could push Tesla stock? Now, the first one is very simple, guys, and it's not Robotaxi or Optimus. I know, I'm sorry, I'm gonna get blasted. I know the Tesla bulls will be mad at me, but that stuff to me is years away from either of those things having any meaningful impact on earnings. That is what is key. I know some like to say it's gonna add trillions to the market cap today for it, but that's not the most likely scenario, and most certainly not what most large institutional investors are thinking in regards to Tesla. So it's not that. The big catalyst, I think, will come if Elon gives us the full details on the next model or the cheaper mass market model, whatever the heck he promised here, that's supposedly coming in Q2 of this year. We get those full details, and more importantly, he gives us excellent guidance overall for Tesla stock for 2025. And I mean tangible details, like it's coming next quarter, and we're going to sell it for $29,000, and all the other details kind of around it should really be something that is truly a catalyst for the stock. And if he actually says it's delayed, doesn't give us kind of a vague thing, but he actually gives us a delayed timeline for it, then we could be in for some pain unless, guys, this is key, the 2025 guidance given is really outstanding despite that. Remember, formal guidance will be the key on this earnings like it is for most companies around this time, but add in that additional model he said was coming, and you have the formula to really have, and I mean saying it's coming, Q2, like he said originally, then you really have a formula to have some fundamentals to back up the stock price action that we've seen the past few months that haven't had fundamentals behind them once we got across a certain threshold there. So, and both of those things can absolutely happen on this earnings call. And if they are, I can absolutely say there's something fundamentally there that absolutely can drive that price higher here in 2025, but we got to have them both. So what am I doing personally, and at what price am I looking to buy more? This is where having your plan set before the earnings call is key. So you have to do it now, guys. You can't wait. You got to get it set before the earnings call. Now, I know many hate that I say it, but planning and having price targets is key to investing, especially with Tesla stock, because it is such a unique stock. I know you guys hate it, but that's the reality of it. That is how I'm able to consistently, I know everybody calls me a bear. No, I just consistently buy the stock at very low prices relative to what it trades that year. Every single year I've been able to do that on rinse and repeat with Tesla stock. And you can absolutely take advantage of that uncertainty, of that craziness, if you play the long game and stay away from all the short-term speculation, all the ridiculous games that YouTubers put out there. Get out of this, short that, come back to it, sell here, macro there, whatever. Stay away from all that short-term speculation and simply follow your plan. When you do that, you get shares on the cheap and can add at prices we really shouldn't be able to add at, like at 169, 141 just a few months ago last year. And I was crazy at the time for saying that it was going to go down to those levels. And of course, obviously not buying at those higher levels, but hey, that's the reality. And the buys were easy to make, but when you're prepared and you're ready to go and you're actually looking at the stock objectively instead of chasing hype and chasing everything else, setting those price targets was honestly quite easy to see coming. And more importantly, the buys were even easier to make because I wasn't scared of all the scary narratives that were out there at the time. And guess what? I got to enjoy this latest run, and so did a lot of you guys out there with absolutely no FOMO, asking, should I add Tesla at, 400, 480, whatever the price ended up getting at. It was pretty high there. It was really running there at the end of the year. I got to enjoy that entire ride and not worry about or even think about any of that sort of stuff. Oh, like always, I have cash ready to deploy, and I don't care about the price action nearly as much as I care about how the business is performing, and will happily deploy capital if we get great guidance that justifies a higher valuation. And of course, because of that, for some reason, Wall Street gets dumb enough to send it back down under $300 again. Now, I know that price target doesn't make any sense to you guys. Hear me out here for just a second. First off, I got to have both those things happen for me to be interested in adding at that particular point because of valuation and everything else. But it's critical you also understand this next point in regards to my price target. I have a full position in the stock, so I'm just looking to add bonus shares at this stage, guys. Full position can be different for anyone, right? I mean, if you got a $10,000 portfolio, a full position of Tesla is going to look totally different than somebody with a $10 million portfolio. And of course, somebody with a $100 million portfolio, a full position is going to look completely different as well. So it's relative to your situation. Basically, how much money are you willing to put risk on Tesla stock as kind of a shorter defined way to put it there. There is no share count. There is no dollar amount. That's the right amount or anything else of that nature. It all comes down to your plan, your risk tolerance. Heck, Tesla stock is not right for everyone either. So for me, I don't need any more Tesla stock at all. And most of my shares were bought a long time ago. Fair enough. That's how it worked out. And I have been selectively adding over the past few years now in kind of the mid to low 100s repeatedly. We've gotten those prices repeatedly over the past few years. I was able to do that. Even if I needed to build out my position, I could have built it out during that particular time frame and had a really nice average still because I had a plan. I had price targets, and that's why that's all so important. Basically executing to your plan and price targets because it allows you to be selective and not be forced to play games or trade or hedge or FOMO in because of stupid price targets given by YouTubers or anything else like that. You don't get sucked up in any of those sorts of games whenever you play the game properly and you set those price targets. Now, the other option that may be more appropriate for a lot of Tesla stock investors is just do a simple DCA and move on. We talk about all the time on this channel, especially when we're talking about Tesla, Palantir, a lot of other stocks, regardless of whether they're at, $7 for Palantir or, $70 for Palantir. Hey, one of the safest ways to buy a stock like Tesla stock until you get more experienced and develop the skills to do a modified DCA on a stock is just simply to DCA into the stock and move on because Tesla is so volatile. That's definitely the easiest way to do it. If you want to learn how to do a modified DCA and really take advantage of great prices in Tesla stock, you need to take advantage of the earnings flash sale that's live right now and going away shortly, where we teach exactly how to do that. We have 5 free courses. We have free coaching. You get direct access to me. We have live Q&As. You get access to the best 6, 7, and 8-figure Discord out there. Guys, there's so much involved in it. Check out the pinned comment, see everything that you get, and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.